And confirmation you guys can hear me is great. So let's go ahead and get underway. We have a presentation I'm very interested in seeing. If any of you have seen the 300 classes I've done on RMO, you know I like RMO quite a bit. So I'm sure you've seen them on YouTube and things like that. The next presenter actually is not a MetaStock employee, but has been trading very successfully with some new tricks he uses with the RMO. And so I'm very keenly interested to see how he's using the RMO trading system that's in MetaStock. Okay, awesome. So the guest that we've got on today, please welcome him at his very first MetaStock presentation. We're very, like I said, I'm very excited to bring him in here and have him talk. He's a veteran trader. He's been trading since the late 90s, and let's go ahead and get him in here. Let's have him talk to us. So I'm going to go ahead and change the presentation over to him.
My name is Roy Swanson, and yeah, I want to thank Jeff for allowing us to do this presentation. We're here because we do love MetaStock and RMO. I am the founder of SteadyTrader.com. It's a website about quantitative-based trading. I also have to read the disclaimer, but I've summarized it to the salient points, which is that we are not brokers or certified financial planners. And all the posted results are illustrations based on simulated historical results. And finally, the CFC rule, of course, past performance on this or any trading system is not indicative of future performance. This information here is solely our opinion and intended to stimulate your own explorations. So, a little bit about myself, since I am a stranger to this group. My name is Roy Swanson, and I did found Steady Trader about a year and a half ago. I started trading back in the 90s, and I'll never forget it because it was the dawn of online trading, and I was working at a publishing company, and I walked into the office of the controller, and he was sitting there day trading on his online brokerage, and that was very new back then. He told me he was putting his kids through college day trading while he was at work. So I got the bug, and I started. I opened up an online account and started trading, and never looked back. A few years later, I was actually in talks with DL&J to start working on derivatives. They found out that I was a math geek, and derivatives were just starting to catch fire. I really hadn't even heard of them. They weren't a big part of the buzz, especially in retail trading. So I decided to turn it down. I didn't know if they were really going to go anywhere. So I don't always make the right call, but I kept at it, and I ended up consulting to quite a few trading system providers. In fact, my partner and I at Steady Trader have about 25 years experience working for various companies that are basically, this is a cottage industry to some extent. Genius traders, I call them, figure out trading strategies, and then they offer them to the market. We've consulted for quite a few of them. So we know the strengths and we know the weaknesses of a lot of these systems, and we also know why traders have trouble even with the good systems. And one of the reasons when we decided to go out and create our own system, we decided to use MetaStock, is we realized, why reinvent the wheel? MetaStock has been around for a couple decades. Their platform is rock solid, and they really have probably, arguably, the best collection of really reputable scans and scanning tools that you can find anywhere. So why not just use those tools and then just find out how to tweak them into a system that works? And that's exactly what we did. So on today's agenda, we're going to talk about the new stock market because we feel the market has changed a lot, and I want to make a few introductory comments about that because we've designed our trading system, the green light system, to match what we call the new stock market. In a sense, this all started when I wrote this book called Read This First Before You Buy Stocks. It's an Amazon Kindle book. It's also been up on Amazon it's just coming up on the year anniversary. And it was basically intended to be a sort of a Bible. The new rules for the new stock market is what we call it. So let's get going. Oh yeah, a little bit about the green light system. It is powered by MetaStock. It's extremely accurate. This was one of the things that we designed. We wanted to design this for regular traders, not overly wealthy traders who can afford to lose. This is for people who can't afford to lose, so the accuracy was paramount. We have an 88% winning trade rate. We have solid gains so that when you do trade and hit a winning trade, it covers the commissions. And basically 4% to winning trade adds up to double-digit monthly gains. And we also wanted a system that lets you get in and out of the market very quickly. 2.5-day holds, and we'll talk more about that in a minute. This is what the system's been doing in the last 3 months, and we're very proud of that fact because, as we all know, the first quarter of this year has been what people call a sideways market. I think that's charitable. I call it a yo-yo market because it's going up and down. Plenty of chances to lose in an up and down market like this. It's sideways over the long haul, yeah, but it's really kind of, it's not a very safe market, I would say, in my opinion. So why are we here? Well, as I said, when we wrote the book, Read This First, we realized that the market has changed. And I just wanted to show a couple of graphs to illustrate that. This is old news to a lot of people. The old market, from, we've seen this graph forever, from the Depression up to about the 80s, 90s. It just went up, 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 up. And then I call this the change. This was the period in the basically late 80s through the 90s. And I call it the market of dreams because a lot of people start to think it's very, very easy to make money trading. Gee, just get in there and trade and you make money. After this change then, something happened. And this is what we call the new market. It doesn't take a rocket science or a quant to see that the graph on the right has no relationship to the graph on the left. The magnitude of the boom and bust cycles is huge, and also the thickness of these bands here is much greater. There's so much short-term volatility that comes and goes. This is what we call the new market. And this is a straight scale. This is not a log scale. There's nothing hidden in a straight scale graph like this. So when you start to think like this, there really is a new market that's been in place ever since, let's say, somewhere in the mid to late 90s. And you can look at this graph in constant dollars, adjusted for inflation, and you basically see the same thing. You see these huge volatility spikes, these boom and bust cycles, as I call them, in the last 15 years, and really you compare one of these to the run-up to the Great Depression, they dwarf it. And this is in constant dollars. So we really do feel that this is a new market, and a lot of the systems out there and a lot of the philosophies and the background behind trading systems is still based on the market before what I call the change, or before the new market. The old market, we know, was about fundamentals. In our opinion, the new market is all about timing. It's all about getting in and getting out. The new market, I think we all know, is caused by short-term profit-taking. The big institutional players, they take their profits very quickly. That creates the short cycles. They're all on the same page, all the institutional players. So the cycles are not only short, but they're strong. And this isn't going away. So basically, you have short, strong cycles. And these three words really characterize the new market. So we set out to create a strategy to trade in this environment, which we don't think is going away anytime soon. And the first thing we think is important is what I call setting your term, or we call it the shutter speed. If you know how when you have a camera and you set the shutter speed too long, everything's a blur, right? Well, long term, that's the long shutter speed, buy and hold. That's dead. And if anyone doesn't think that's dead, you're probably in the wrong webinar. In fact, BlackRock did a study that showed that the average gain was 2% a year for all investors over the past 15 years, and most of those investors were basically letting their money sit. They weren't really traders; they were investors, and they were letting their money sit. 2% a year for the past 15 years. In our opinion, that's dead. Short-term swing trading is okay. Day or intraday trading is okay. High-frequency trading, we read a lot about it. It's probably great, but you or I can't do it because we don't have trunk lines to the internet and we don't have supercomputers. So, for us, we're really stuck. Us regular at-home traders are stuck in the middle here, short-term, day or intraday trading. Now, when you talk about setting your shutter speed to a short-term perspective, I want to show an example here which really drives the point home. This is the crash that we all remember, October 2008 to March 2009. 5 months that basically wiped out a lot of people's accounts. This was when the news was saying the market's in free fall, will we ever get out, all the rest of that. If you look at the crash on a weekly basis, it's not so severe. There are up periods and down periods. But here's where it really gets interesting. Look at the crash, the big one, on a daily basis. And you see that at the bottom of that graph, the green and the red bars. There were 41 days out of 105 total trading days. 40% were up days. You know, I say what crash? 40% is almost even. There's plenty of opportunity to make money during the crash if you had the right system. So this is what we mean by setting your shutter speed to a short term. We believe that daily is the proper shutter speed to have for anyone trading. It's about getting engaged daily and getting engaged on a steady daily basis, which is why we call our website Steady Trading, Steady Trader. But we do feel you need new rules, and now we're going to talk about some of the new rules we used behind the green light trading system with RMO. Again, short-term time horizon daily. If you're in the market and looking for trades on a daily basis, you really only can use a few good signals, because if you get more than a few, you'll become overwhelmed. So we really wanted selectivity for just a very, very few signals. We want to have our rules for the system. Every system has rules, but we want to be able to adjust them daily. What good is a daily perspective without making adjustments to your strategy based on the current day? So we built in daily adjustments. And finally, we believe very strongly in current performance as validation. And again, the disclaimer we all see all the time, past performance is no indication of future. That's stated for a reason. And all these systems that are validated on 5 years performance, 10 years performance, thousands of trade, we feel that that's basically irrelevant, because the only thing that matters is what's trading now, what's working now, and we have built into our system a very current and recent perspective in terms of all the scans we do for the signals. So again, our motto is adapt daily. Set your shutter speed to daily. And again, the new market the last 3 months is the same as what we were looking at on the bigger scale before, the last 15 years. Here we are. It's up, it's down, it's up and down. You can call that sideways, but boy, there are plenty of opportunities here to lose. There are plenty of opportunities here to gain. There's really a lot of activity going on here. So let's start to talk a little bit about the system. I know you're all here to hear about. This is the green light trading strategy, and we designed it to trade through what I call the never-ending cycles of profit-taking pullbacks. The way we do that is with short, quick price moves. And again, a 2.5-day average hold and a 4% average gain. We sort of designed the system to hit these goals, and then when we found it could do it, we were very pleased. But it was all about having these goals in the system to begin with, which I think is always a good philosophy in trading. Have goals and then trade to those goals. Don't just hope for the best every time you take a trade. This is the current track record. Again, we talked a lot about current performance. The current track record of the system is remarkably consistent. You see the win rate for the last 3 months, again, this quote-unquote sideways market, is 89%. It's actually been getting better. It's in the 90s the last 2 months. The gains have been holding steady at 4% or even better. How did we do this? We did this by, and the system does this, by ratcheting down on the exposure, the percent exposure, or the number of signals that actually trigger into trades. So while we were running about 50 trades executed a month, that cranked down to 45% or 34% in March, which was even more skittish than January and February. So the system, as you can see, is self-correcting, and it does this on a daily basis, but you can really see it on a monthly basis. Anyone who's been trading these last 3 months knows what happened in January, February to March, and you see how the system, especially with the exposure, self-corrected to maintain the accuracy near 90% and the gains of 4% or plus. So that's the track record. Now, how do we do it? Well, we start with RMO. And the reason we start with RMO is because my partner actually was talking with Jeff about RMO and saying, Jeff has the highest regard for RMO, and I figured, well, Jeff must know it. So we started with RMO. And then we ended up doing 7 tweaks to it to basically get it to trade the way we wanted to trade, given our perspective on having this daily perspective, this daily shutter speed. So the first thing we do is we measure and rate the daily market conditions. Now this is outside of RMO. This is just we use MetaStock to actually measure and rate daily market conditions with a quick scan. We then use that measurement to change our list selection. We don't always scan the same lists. You know, we never scan the entire group of lists that you could scan in terms of all the active issues. But we scan selective lists, and it's based on step one. So if the market is looking bullish, we might select some lists. If the market is bearish, we select others. So, and this is all delineated in the strategy manuals. Then we run our signal scan where we use RMO, and we also use RMO plus a companion exploration. We do use a second exploration with RMO to what I call tighten it up to produce the signals. Then we measure and rate the signal strength for accuracy. Again, and we learned this, my partner and I learned this from consulting for so many different systems. Signals work not all the time and not on all stocks. You have to measure and rate the signal strength on a trade-by-trade basis. So we take a step, we take a minute to just look at the signal strength and accuracy of each signal that's generated from our scan with RMO plus. We then double check a second time for false signals. Because again, even the best algorithmic trading, I don't care what formulas you're using, I don't care how well it's backed up, there are always false signals. So we do a second scan for false signals. Finally, we adjust for the daily market condition from step one. Again, we adjust our trading instructions, or especially our entry points, based on the conditions in step one. So you can see in here there's several places where we do course corrections on RMO. Two are based on the daily market conditions because we felt that was extremely important. And then these other two are really based on things that we do in the strategy to improve accuracy, rate signal strength, and prevent false signals. Finally, we apply the signals that are generated with a strict money management system, and we'll get to that in just a few slides. Now, this is a basic RMO chart overlay, and you know, if you do a scan in RMO in MetaStock, you know, you can get dozens of stocks, you know, with buy signals, and here are your typical buy signals. And you can see that RMO is generally very good. When there's a blue buy signal, the stock goes up. Now, our challenge was to say, well, we don't want the stock to go up. In this case, it takes a month to go up. We're looking to get in and get out within a maximum of 5 days. So to us, a signal like this, which you get the buy signal and then it just sort of dillies around here, well, anything can happen, right? So we're not interested in that kind of signal. We weren't interested in signals, you know, that go the wrong way after they trade, but especially we want to crank down on the time horizon. Here's another basic RMO chart, and you see again, a lot of times RMO the signal triggers, but you just don't get the pop right away. This is a great signal here, but again, it was beyond the time horizon of what our goals are, and our goals were. This is really from a philosophical point of view. We want to get our money in and out while we can take it, and not have to think it's going to be in there for 8 days, you know, 15 days even, whatever. Now, let's show you a few green light signals. And again, as we say, those 7 steps we mentioned earlier tighten up RMO. This is a very typical green light signal. This is an RMO signal, basically. Same blue bar, same blue arrow, but look what happens. It was flat beforehand, signal, target entry on the next day, first day up 7, next day up 14% by day 4, and then the trend is over. This is very, very typical, and that's why I selected this slide, because notice the stock was flat coming in and flat going out. It's basically a 4 or 5 day trend, and it just pops. This is the kind of trade that we are interested in taking. We're not interested in taking super great gains over, 6 weeks, 6 months. We're interested in taking a nice, a 7 to 14% gain in 1 to 4 days is fine by us. Here's another one. Same thing. We had the signal on this day, target entry the next day. By day 2, we're up 7. By day 5, we're up 9%. You can see by the next day, the trend is already ending. And here, finally, I love this example. GE. GE is not a stock known for going anywhere because it's GE. It doesn't move much, right? This was just from this month, from April 10th. We got the signal. The next day, 10% lift in GE. And the next day, the trend is already over because it's GE. It's going to revert to its mean, right? So you've got GE being GE and then GE being GE. But our tightening up, those 7 steps of tightening up RMO, oh God, it's to get a nice really trade on GE. Now, just want to talk a little bit about how we do it. Again, we measure the overall market condition daily. We have a simple 5-point scale, bull to bear, and we use red and green lights in keeping with the name of the system because we want to make this fun. So we have bear, red light, bull at 3 green lights. And then we use this rating that's done at the beginning of our scanning session to adjust the lists that we scan and adjust our entry parameters. We do a signal scan based on a multiple expiration with RMO plus one other very popular MetaStock expiration. We gauge the signal strength of every signal. You get about 10 signals from that scan. We have a 3-point scale, very simple 3-point scale to get the relative signal strength of each signal. So we start with 10, we whittle it down to 6 based on this little 3-point scale we use on each signal. Then we validate for false signals, because events can fool any analytical system, and we get it down to a final 4. The goal of the system is to get 4 signals a night. If you recall, I said, when you're in the market daily, you really can't handle more than a few signals in any given day, and that will become apparent as we talk about the money management that we use, which we call a quick cycle portfolio. If you take any formal stock trading or financial services trading, what you find out early on is that they teach money management even before they teach signal selection or stock selection. Money management really is the key to successful trading. For these signals, we teach what we call a quick cycle portfolio. It cycles the money in and out of the market daily. You're getting your 4 signals every day. So you're putting some money in on Monday, but with an average 2.5-day hold, it's coming out Wednesday. Rinse and repeat. Tuesday, same thing, the money comes out Thursday, Wednesday, Friday. So the money's just constantly going in, constantly going out. You're never putting your whole portfolio at risk. You're always putting just a little bit in. You know the old rule, never trade more than you can afford to lose. So we're always just trading a little bit. But the way this works mechanically is that these modest gains stack up for very significant returns. And here's an example of how this works. Again, we designed this for average traders. Here's a $15,000 trading account, 4 signals. Let's say you're buying $2,000 buy orders. If you get 4 signals a night, maybe 3 execute, you've got $6,000 invested, 66% accuracy, 2 win, 1 lose. And again, green light, the numbers, as you probably recall, were much higher than this. We're getting 88% accuracy. But for the sake of this argument, to show how a quick cycle portfolio works, let's say you get 2 wins, 1 loss, multiplying it out, taking out your $10, for your commission at your discount broker. You're netting $100 on each day. You put in a 1% stop loss on that one loser, $30 off. The net profit is $70 a day. It doesn't sound like a lot, but again, if you do this every day with consistency, that's $350 a week, $17,000 a year. It's a 200% annual return. It's a very mechanical way of trading. And we designed this deliberately because we're not looking for outrageous trades. We're not looking for the triple bangers and all that other hypey stuff. We're looking for nothing extraordinary, just realistic gains with very short holds and stacking them up every day so that we get a very solid return. And it works out to be over 200% by the end of the year. And as we say in the office, this is why Derek Jeter was the captain of the Yankees, because base hits win the ball game. And this is a base hit strategy that anyone can succeed with. It's about hitting a few base hits every day. The other thing this quick cycle risk control works is that when you have signals that we have with the green light signals of extremely high accuracy, and again, we're touching 90% here, you have very few losers and short holds which give you low exposure to corrections. So all of these combine to the fact, with the stop loss set at the very few losers, you really don't have drawdowns, you really don't have losing months, because the high accuracy and the short holds and the stop losses are key to working with the quick cycle portfolio. In other words, the two work hand in hand. We call it a perfect match between the signals and the money management. And again, this was by design in the beginning. We were looking for a system that could be traded on a daily basis with realistic goals, conservative goals, in a matter of fact, just a couple of percent a day on your, on a trade, on your gains. We were not looking for anything overly hypey because we know from our experience this is how pros trade. They just go out there and get base hits every day, and they stack them up. And I would say the number one benefit to the quick cycle approach is that there's no attachment to any given trade. You know, we're not trading to have a love affair with a stock. We feel that you know, greed kills and greed cometh before the pullback. There's so many strategies out there that, you know, have all these different exit strategies, and we get questions all the time about, well, what if I hold it for more than 5 days? You know, what happens if it goes up after the 5th day? It goes to 8, 9 days, and it's going up. Well, the fact is it could have just as easily pulled back. You know, our signals and anybody's signals are not going to be that accurate going out. You know, going out 3 weeks, 4 weeks, 6 months. We believe you can forecast the weather for tomorrow, and you can forecast the stock market for tomorrow, but that's about it. With a quick cycle approach, you're always focused on the next trade. You're not focused on getting the most from every trade because the averages are solid, they stack up, and there's always the next trade. So it creates a mentality, you know, of really a very relaxed mentality that you're not hanging your hat on any one trade to save your month or whatever, because basically 90% of your trades are base hits, and they're cranking out for that annual return of over 200%. Questions we get a lot. Minimum account size, I think we covered that. You could trade it with probably as little as $12,000. That's what our model shows. So this is not for, you know, exorbitant trading accounts. Can you trade with options? I think that the time horizon of a maximum 5-day hold could work with weekly options. We're not options guys, but it could work with that. Can you work a regular day job and do this? Yes, the scans take about basically 20 minutes after close to do this. How much subjectivity? Well, there are adjustments. There are adjustments to the rules, as I've mentioned a few times. We adjust daily. We make those daily adjustments. That's not the same as subjectivity because we give you pretty strict rules on how to make those adjustments. So we call it adaptation as opposed to adjustments. Again, this is the summary of the results. We've been through this. Extremely high accuracy, high annual gains, no drawdowns because of the stop losses on your few losers. Very easy to work, easy to fund. What you get with the system are full instructions. We teach it a number of ways. We teach it with a video and with manuals. Full instructions on how to run the scans, how to validate the symbols, how to place orders, and how to manage the portfolio. And then we give you 2 ways to validate your understanding that you're doing it correctly. We have access to a scan room. We actually record in real time ourselves in the office running the scans every night, and then we post these. So on your homepage, you'll be able to see us live, just selecting the scans, running the RMO scans, running the supplemental tweaks, and you'll see it live, and you'll see how you make the calls that need to be made and the daily adjustments. You also get free access to the daily signal service, so that after you run your scans, you can look at the daily signals that we created, and you can cross-check your results with our results. You'll get those signals free for a month with the system. This is what the homepage looks like. Your whole toolkit is here. You get the manuals and all the instructions here. Again, then you've got a full set of scan room videos that gets updated constantly. You know, every day or two, we add a new scan room in there, so you can watch us running the scans. And then every day you'll see a couple of days worth of signals. You'll get tonight's signals after you run them. So any way you want to do it, you can double check your results with our results. We feel that's the best way to learn. You know, you've got the rules. Go have at it, see what you get, and then compare it to what we do. And over time, over a few weeks, and I would say it probably takes about a week or 2, maybe 3 weeks, you'll probably be matching our results, you know, 95% of the time. That's about it. We're having an introductory special now because this is a brand new offering for the MetaStock community. We're offering it at only $249. It's regularly $350. Again, you get the full instructions, unlimited scan room access, and 1 month of daily signals in the package. and it's all sold at a complete money-back guarantee. To order it, really all you need to do is remember that URL, steadytrader.com. I know you can't click on this presentation, but if you go to steadytrader.com, you can see more information on the strategy, the green light strategy, and you can purchase it there. You can be trading it tonight. And you can also go to steadytrader.com and get your free copy of Read This First Before You Buy Stock. This book has done very well on Amazon. It's on Kindle, but we're offering it here free if you go to the site. If you read the book, it takes about a day and a half to read the book. It's 80 pages, very quick, but you'll get more of a sense, even more of a sense than what I tried to convey here as to why this system really works in this, what we call, new stock market. So that's the end of my presentation. I can watch the chat box for a few minutes and see if we have any questions. Be happy to entertain some questions now. Do want to thank you all for coming. Not really seeing any questions. So, Jeff, should I hand this back to you?
Absolutely. Looks like we a little bit of a test. Looks like we do have some questions coming through.
I don't see
RMO is a part of XIV, meaning MetaStock 14, or can we buy it separate? Well, it is actually included in every version of MetaStock since MetaStock version 10. So that answers actually two questions. What version of MetaStock is needed, and is RMO separate from MetaStock?
I'm actually using the one prior to the new one because I've just been too lazy to download the new one.
Yeah, well, we'll need to get you on 14 because I'm going to show you how to kind of put those lists together so people can use them externally. Yeah. So, but one question that I can answer is how much volume do you look for, Roy?
We don't, there are a lot of things we don't do. We don't look at volume. We kept this very simple, and you'll see that in the course and the strategy when you get it. The one thing we don't do, we don't get involved in what I call penny stocks, which are stocks under $10. But we want to keep this very simple, and we use it's a very straight ahead, press the buttons in MetaStock, run these extra tweaks, and do the scans and get in and get out with your scans too. Because again, when you think about trading on a daily basis, if you're spending more than 15 or 20 minutes, I mean, this is for people who have busy lives, and we're not looking for lots of different decisions to be made on any one trade. When you see these scan room movies, they're kind of funny because it's just bing, 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 click, click, click. The scans themselves, because we focus on recent data as opposed to huge amounts of data, the scans themselves take, I don't know, 20 seconds tops, some of them are 10 seconds. And we don't, I guess I would call some of these things like volume, we call it distraction. It's just our opinion, obviously, but it hasn't made a difference.
Another question is there a Mac version of MetaStock, or is it available on a PC? Well, I will start off by saying, and I'll take that one, Roy.
Sure, yeah, I know.
I will start off by saying that it's an app. It's a Windows product. We do have a lot of people that use it on Macintosh. It's possible with the new Intel chips, but it does require Boot Camp, and it does require that you have a copy of Windows installed on your Macintosh. So there's a couple of different ways. For questions on that, I'd probably refer you to our sales guys. It is possible. It works really, really well in that environment. I've seen it, and it actually works better on a comparable PC. But talk to one of our sales guys about kind of what the recommendations are. And I think that's the end of our questions. All right, Roy. Well, thanks for coming in today.
Sure. Thanks for having me, Jeff. And I hope people took some things of value, tried to do a little teaching about what's really happening on the market and the money management, outside of the strategy. But it was my pleasure.
Okay. All right. Thanks, guys. If you want to check that out again, the website to go to is steadytrader.com. and get your free copy of that book while you're there. All right, thanks everybody. We're going to log off now.